Hi everyone, welcome to the Digital Fifth Fintech Show. Today we have with us Anirudh, who's the founder and CEO of Trilok, and they're primarily focused on solving the digital banking needs of the country. Now, what it means is that they don't have a platform for digital banking itself. What they do is they have a platform which will help in based on underlying data. They help in migrating the customers through towards digital channels, helping the customer in doing transactions online, and which is what the need of the hour is. And many large banks have migrated good amount of percentage of their transactions on the digital channels thanks to the platform from Trilok. So thanks Anirudh for joining us.
Yeah, thanks a lot for inviting me, Samir. It's a pleasure to be here.
Thank you. I think before we go forward, I think we want to understand the story behind even the name itself, why Trilok came. So maybe some details about it, and obviously it will be good for us to understand what you guys are into.
Right. So when we started the company, we wanted my co-founder and I wanted to give it an Indian name. So we picked the name Trilok because we wanted to get data from every world, be it Asman, Zameen, Patal, kahin se bhi data leke, we'll extract insights from that. So that was the goal, and of course Trilok, we couldn't get the domain name, so that's why we called it 3LOQ. So yeah, that's the story behind Trilok. Yeah.
Okay. And what are you guys into? What exactly do you do?
So we are mostly into behavioral analytics for the banking sector. When we started out, we were creating recommender systems, for a wide variety of verticals like telecom, content providers like your Disney, Hungama, and so on, and then banks as well. And then over the years, we started focusing primarily on the banking sector, and now we do end-to-end analytics, and we also do the recommender systems for banks.
No, so I think typically we have seen that the normal platforms which are used beyond financial services, anything like e-commerce, any place, you always have good recommendations and there's always an engagement level. Whereas if you look at the banking world has largely remained in the very, very structured internet banking and mobile banking, and they're structured. They don't change anything for the customer. Nothing changes, not even an iota. So I think what's your take? This kind of recommendation system are way ahead for financial services, or they're missing the bus?
No, I think see, the thing is, from a banking perspective, what we have learned over the years is because it's a regulated space and we're talking about customers' money, and the entire system has been built over multiple generations. There are a lot of old systems, new systems, and they all have to work together 100% of the time, right? So from that perspective, it is a very tough challenge for the banks to basically continue to modernize their systems and to basically deliver cutting edge recommendations. But as we see over the past 3 to 4 years, we are seeing rapid development, and banks are taking up these new solutions that are out there, and they are deploying the recommender systems across the board. I think as time progresses, we're going to see a lot more personalization happen at both the mobile banking and the internet banking level, and it's going to get better and better. I'm quite positive from that perspective. I'm quite hopeful.
Okay, and when you talk about digital banking, both internet banking or any other engagement, what kind of engagement you have seen where you are able to help those entities? What kind of customers you have, and what exactly have you done so that their engagements increases dramatically?
Right. So in our case, when we started developing these recommender systems, the approach of a standard recommender system, like you see in e-commerce, where you have if customer bought X, then he also bought Y, right? Those kind of recommendations might not work in a banking perspective because there are very few products as such, right? Compared to an e-commerce. E-commerce has millions of products, whereas a bank will have like 50, 80 products. So from that perspective, the approach cannot be a cookie cutter approach. You have to create something that is specifically for banking. So from that perspective, we had to sort of rethink what a recommender system looks like. And from that perspective, that's why we started understanding what is the behavior of customers, right? Why are they using the banks in the first place? Why are they using mobile banking applications? And why are they not using them, right? So when we started digging into when we started asking those questions, what we saw was customers are their behaviors are sort of set, right? And they have a certain habit. They have, like, let's say if they are used to going to the branch and to do a fund transfer, they'll continue to do that unless there's a massive disruption. And if the disruption is not too long, they're going to revert back to their original behavior. And that is exactly what we saw during the demonetization time. The demonetization happened, everybody expected digital to boom like crazy. It did boom, and it went up. There was an uptick, and then 3-4 months later, the customers are back to the branches and they're back to the ATMs, right? So from that perspective, what we see is, like, financial habits are hard to change, right? And they require systematic effort from the customers and from the bank's perspective to handhold the customers and to sort of create baby steps for the customers so that they slowly migrate from branch banking and ATM banking over to mobile and internet. So that has to be a step-by-step process, primarily because habits are so entrenched in the banking world, right? And with habits, when you dig deeper and you read works by Nereal or BJ Fogg, where they really talk about how the larger companies like Instagram, Facebook, Google, and all these guys, they use the power of habit to really drive customer engagement, right? And so we started studying some of that and started applying it to the digital banking world. And what we learned was, like, the banking world is very different. It's a need based application. I'm not going to go to a banking application and start playing around with it, right? I'm not going to send Samir money just because I felt like it. I can do it, but I'm not going to
I
do
love
it
it.
too often. Yeah. So from that perspective, what happens is, because it's a need based, and I'm going to probably do my bill payment, and I'll be out of it, and maybe check my balance once a month. So I need to engage the customer on a constant basis. And unlike TikTok, where I can show a video, there is no video to be seen here. Like, it's not an exciting application. So from that perspective, what we need to do is we need to get the customer exposed to the variety of features that a bank has to offer on the digital banking app, and at the same time focus on basically making sure whatever recommendation we are giving is relevant to the customer at that point in time, right? And it is slowly nudging the customer towards forming a habit in the future, right? So there are multiple layers in this problem, and it's a complicated problem. And so we spent the last 3 to 4 years perfecting a solution to figure out how to nudge the customer towards forming this new habit, disrupt the old habit of branch banking and ATM banking, and slowly nudge him towards forming a habit of digital banking. And we have seen consistently good results with some of the largest banks that we are working in India, and there it's through the support and through their belief also that they want to make sure that the recommendations are relevant, and at the same time they help the customer discover the various features of digital banking. So it could be something very specific, like 99% of the people don't know that you can change your debit card pin from the mobile banking app itself. It's like one of the least used features, but it's a very useful feature because we see a lot of engagement of that feature on ATM, right? For example. So there are a lot of hidden features like this which customers will find useful, but they don't know it exists because the banking apps are very feature rich, right? And so from that perspective, we've been helping banks to help their customers discover the features and discover the right features so that the it leads them towards forming a habit, one step at a time, a baby step at a time, right? If I'm going to the bank and doing a fund transfer, doesn't necessarily mean that I'll do it on a mobile immediately, right? So there, what we found is, like, maybe he's not even withdrawing cash from the ATM. Maybe he needs to be informed about that feature first, right? We as Metro users, we kind of assume that everybody knows that you can withdraw cash from the ATM. But what we see from data is there is a large chunk of people who have never withdrawn cash from the ATM, even though they are going to the branch and they continue to withdraw cash, right? So from that perspective, there is a lot of we need to take a very measured approach so that, you really cater the recommendation towards the customer, and at the same time, the technology needs to be built for that specific vertical and solve that problem there.
Okay. Okay. Uh, any kind of impact. So let's say the question will come is that looks great on paper, and when it gets translated to real action. So पहला तो ये कि AI/ML doesn't work, right? And secondly, if it is deployed, we've never been able to see the impact. That's I keep hearing. AI/ML doesn't work. Secondly, when you use it, we have not seen impact. So what is the kind of AI/ML you use, and what is the impact you have seen with your clients?
Right. So, see, the thing is, what we did was we started out by taking the off-the-shelf solutions for recommender systems, right? And none of them worked, right? None of them worked because they were designed for a completely different problem, right? So we had to sort of take bits and pieces and create our solution sort of from scratch, which basically solves this specific problem, right? The problem of how do you make a recommendation which will not only help the customer discover a new feature, at the same time, it's going to increase long-term engagement and long-term and going to nudge the customer towards forming a habit. So that was key. So here what we did was some of the technology we had to create from scratch, and we use off the shelf solutions like decision trees, but it is not a cookie cutter solution. It's not a one stop. So we had to sort of have multiple things strung together to solve this problem, right? And from a results perspective, initially, the people who follow our recommendations, there is a drastic jump in their transactions in the number of, so there it's anywhere between 27% to 67%. So there is like a huge jump, depending on the bank. And also there is also increase in the variety of features that customers are using, because what we have seen is every feature that we pick, the customers who follow that recommendation, they start figuring out what are the features closer to that also. So for example, let's say if I going back to the example of changing the debit card pin, when I give that option, they also go and start exploring features like, I can set a limit, I can change my daily limit for my debit card withdrawal. So that starts happening. So now from that perspective, in all of this, like you're not only engaging the customer, you're also telling him new features, and at the same time the customer is happy because he doesn't have to go to the ATM now, right? So you're not saying ki, here is a coupon for Provogue, go and use the mobile banking app. You are telling the customer, look, here is a useful feature. You don't have to walk up to the ATM and you don't have to disrupt. You can just sit on your couch and you can do your business. So that is why we are seeing good amounts of engagement, and the engagement that we give also is sustained for 6 months. So there is a consistent increase in the customer's transactions, and the impact of a campaign can be felt even after 6 months for the customers who do what was recommended.
So I think, as I see, when I say transaction, one can be for revenue generation, and when one can be on a cost reduction. So one side we are saying is that if we take the customer on the journey of let's say taking a loan or maybe deposits or maybe investing in some products, that may generate revenues, and on the other side it will reduce costs, right? So I think both of them will gel well in the current market where everybody is in trouble. So in the COVID scenario, any kind of thought process what kind of uptake you have seen, what kind of engagement you've seen since you work with some of the largest banks in the country?
Right. So in terms of, so there was a drastic change of behavior, and we see that obviously because of the lockdown there was zero POS usage, right? POS was completely down, but now what we have started seeing is there is a slight uptick in terms of fund transfers and the like. And there is a slight dip in cash withdrawals, but of course that is, we don't know how stable this trend is, because we have seen a similar kind of situation when demonetization happened in 2016, right? So from that perspective, we are like in the wait and watch mode, because generally for customers' habits to change, it takes between 4 to 8 months. So for this cycle, towards the end of the year, we'll see what habits have actually changed.
And so maybe what habits have changed for general public and what habits can change because of you. So what are your customers thinking and doing for engaging with the on the digital platform, which will you believe will sustain because you're saying progressive improvement all the time, right? So
Right.
how will your customers behave differently?
So I think what we'll see is as we are working with our banking partners, there is more openness to try new features because see when we started out, all the features that we are recommending were financial transactions, right? But now they are slowly open to also recommending non-financial transactions because so from a banking perspective, it's a cost to the bank to do any kind of recommendations to use the recommendations because you have to pay for email, you have to pay for SMS, you have to pay for all the channels. So from that perspective, it's a cost to the bank. So they basically say that I'm going to focus only on financial transactions. But over the past few months, they have started opening up and they have started to use a wider variety of features and even non-financial transactions like changing your debit card pin or downloading your statement, paying your getting your tax returns and so on. Right? So that is also is basically being promoted now.
And how much is the dependency of such an engagement? So I know I'm going to maybe layer by layer. So let's say, for example, people will have some dated platform and all. So would you need very complicated data analysis or data to be shared with you, or maybe integration with the platform will be very complicated, or it's slightly more simplistic in that first stage before you do something bit bigger?
So because we have been working with a variety of banks, what we realized is working in the bank's environment is quite critical. So that's why we have created our platform to be very adaptable, right? And we focus only on the banking transaction data because regardless of which bank it is, their banking transaction data is going to be crystal clear always because that's the business they are in, right?
Agree.
So from that perspective, we only focus on that one data set you have, and we can access it and we can pull that data and we work on very lean hardware, right? So for example, for a million customer data, we can process on a single high-end desktop and we can churn the results. So it's not like we require 1,000 node cluster to basically do the processing, and that is okay for a Google, but not for us.
No, I agree. I agree. I agree. And any so I think before we close, maybe any last thoughts on what bankers should think about in this current scenario? Any thoughts on what they should think and what they should how they can actually take the digital journey forward? Because it was always digital was always a second tier activity. I mean with due respect to all of them because I've worked 17, 18 years on the other side. And I can tell you that's tough to do the stages. But the fact of the matter is the branches were giving so much of revenue that's difficult for digital to get any prime. So now suddenly it's now the prime channel, the only sort of working channel. So any guidance for them what they should think right now?
I think now would be a good time because there's an external stimulus to basically jumpstart habits, right? So now would be the perfect time to basically jumpstart the customer's journey, figure out for a given customer what specific feature would work for them, and then basically get them jumpstarted on the journey of digital, right? And there, like one of the most surprising things that we see is one of the marquee features of just checking your balance or downloading your statement. That is one of the most powerful features that we have seen across all the banks that we work with, which jumpstarts habits of mobile banking or internet banking. So that's one tip.
Okay. Excellent, excellent. So thank you, Anirudh. I think coffee detailed with it was went on, and I think I also realized that the flow was kept on moving. So thank you, Anirudh, for joining us. This was excellent understanding from our side. Thank you.
Yeah, thanks a lot for having me, Samir. Yeah, it's an absolute honor to come to your show. Thanks.
Thank you.